Hello, guys. This is Social Trade once more. Today I'm going to be reading from Habakkuk chapter 2 as we focus our weekly focus. Yes, for our weekly focus, I just want us to read here so that we can understand how we can treat this week and weeks to come. I will stand my watch and set myself on the rampant and watch to see what he will say to me and what I will answer then when I'm corrected. So sometimes you're gonna get corrected, meaning you're gonna have a weekly bias, and then that weekly bias is gonna change. And then what will you answer? What will you do when that weekly bias is changing? You should have an answer for that. And here when it said and set myself on the rampant, they actually says putting sort of a protection, meaning at this level I'm gonna do this, and at this level I'm gonna do this. So we're gonna see everything that's being said here in here. So I like here in 2 when it says, Then the Lord answered me and said, Write the vision and make it plain on tablets, that he may run who reads it. For the vision is yet for an appointed time. So when we forecast here, we know that it's gonna come there, because we set a vision for the appointed time. So hence that's why the market will always operate on time. On time. That's why the market will stall, but eventually it will run. But then, because it's a vision for an appointed time. But at the end, it will speak and it will not lie. That means it will happen, right? Though it tarries, wait for it, right? So be because it will surely come, it will not tarry. So it will not delay, guys. It will come. It will not delay. It will come. So they say wait for it here. It says wait for it here. So patience is a big deal. It's of our work here when it coming to trading, guys. Right? So now I'm gonna open this like that. I'm gonna open this like this fully so that we can see. Let me do that. Full screen. Oh yes, we got it. So now let's discuss this, guys. So last week we was here, guys. We was here, and there was a possibility that we could go up there and take that buy side. But also we saw on the daily there's this just fair value gap here, being able to hold price. Also, we have this weekly rejection block here. If you mark it out, it's not marked out here. Let me do that there with this candlestick. Even if you put this one there, that's the rejection block. That's the level that hit like last week, right there, and then we fell. So we respected a weekly array here, a weekly PD array, premium array. So we respected a weekly premium array. So we are more likely to seek weekly discount arrays, right? We are more likely to do that. So I was gonna focus this week, meaning yesterday, but I didn't do that. But luckily, now we have a more clear forecast. We can have a more clear one because we have a Sunday open has already happened, right? And even today's Monday too. So now we have more beautiful data. So here on the weekly, we see this volume imbalance here on the weekly that happened from Monday 20 or 5 October week, that week, joined with the 27 October week, this week here. So we have this volume imbalance now. So we closed here 0.75 of it. If you put your Fibonacci from there to there, we closed there. So me, I was thinking today we're probably gonna play like somewhere around these two levels. Even if we go above this one a bit, I was still anticipating that we're gonna fall. But with this jump like this is beautiful. We're gonna anticipate now half this level here, meaning we're gonna anticipate price from 25.468.8 and 25.358.8 to hold the price, to sort of present some sort of resistance, right? We're gonna anticipate that. And then I'm also here on the weekly, we also have another volume imbalance here sitting between 0.25 and the volume imbalance low. If you can see this level and this level, these candlesticks here, so they're also matching this lower quadrant of this whole volume imbalance, guys. So when you see these orange lines on the 1 minute chart, you'll know that on my 1 minute chart, you'll know that they are the weekly arrays. You know, some people are just writing these numbers and they know that that's what's happening. Me, I'm now used to just putting the lines on and dealing with it. So we're anticipating that it's gonna go lower. This is the sell side I was looking at while it was still there. I was thinking if it's placed around this level, these two levels, eventually if it breaks through, I wanted to see, can it take this low here? So with this jump now like this new week open gap is beautiful. We can see that clearly this one is going to be taken out. Then what do we look for next in that case? So now you take your Fibonacci, you take your fib, put it right there, and then let's go put it on the low. Then let's just put it right there. So you're marking there the rejection block, 0.75 of the wick, half of the wick, 0.25 of the wick, and the low of the wick. So we're gonna mark that out. We're gonna mark that out, starting with this level, the rejection block there. We have this, the upper quadrant, half of it, and the lower quadrant of it, the low of it, right there. That's what you're gonna mark. If you wanted, you could go put your fib right there, and then put it up on the half line, 50% of it. Then you're gonna mark uh, these levels again. That means in that case, you'll be getting the eights, like ACT taught. This level is gonna be important, crucial level. This is a crucial level, and this also is a crucial level. But if not, that's okay. You don't have to mark them. As long as these are there, you have the primary marking, like, the primary levels that are gonna be used. So we're gonna anticipate that as the market is gonna go low, we're anticipating this sell side. So we're gonna anticipate this level, and then below this level, we're gonna anticipate this level. This is the 0.75 of the wick, right? Of this wick, right? That's 0.75 of the wick. Here I'm just gonna write 0.5 of the wick. Here's going 0.25 of the wick. And then this is the low, right, guys? Which is the sell side. Low slash sell side, right? It's a low and it's a sell side too. So that's what we're gonna anticipate, right? The market going lower. Let me take a brush. Should even today, because the gap is so large, if we do this, we'd like to see some major resistance right here. Then we'd like to see pull back. We don't like to see this gap full closure, like from this level going back there. No, we don't like to see that. We like to see even close half of the gap and then go lower, lower, and lower. This is the initial one that we're targeting for sure. But then below that, this level is that, this level is for sure. And when we reach this level here, Don't be surprised if it pulls back a bit. That's normal. On the half, 50% of the week, that's normal, right, guys? CC. Cons yeah, let's just say CC, oh, this language. But in any case, we're anticipating downside here. So let's do this. We're anticipating downside. She was just showing using the brush. Okay, delete that. Yeah. This level is a very crucial level to watch out for this week. Below this sell side and below this is the level to watch, right? That's the level to watch. And eventually breaking through, we should see this too. So we're gonna anticipate that it goes there, find resistance somewhere there, and goes lower. Let's go to the daily. I want to show you something. Daily. Okay. Now in the daily time frame. Okay, this is the rejection block. So the daily time frame we closed here on there was also fair value gap right there. Now we went just below, just broke lower like that. So if you look closely here, let me mark it out. That's let's mark it out. This is a suspension block. Your daily suspension block, this one. That's blue, right? Okay. This is a daily suspension block. I know it's very blue, dark. Let me see that. Let's fix you. Yeah. This is a suspension block here. So we're anticipating that it's gonna act like a inversion uh fair value gap, right? So this volume here, imbalance here should not see, we don't want to see price seeing it, meaning it should play on the lower quadrant right here. You have this volume imbalance right here. It should just play right here. We don't want to see it coming here, right? So basically, if it goes up a bit, it could go up, fulfilling half of the gap, go up, then go lower. Because we're thinking sell side, sell side, sell side. And eventually on the daily, this low to be taken out. So, but then the first standard level we're gonna watch is this. This was the one I was targeting while we're there. This one there. So let's sell, guys. Let's do this to close it up with an arrow. Arrow. We was here. I was gonna put it like that and then say lower like this, but then now we're already here. So I can see that we can even reach up to this level right there. Let me do that. So this level, 24.899.3 is a level to watch. So we're anticipating that this volume imbalance is gonna hold price. If we go in there, let me zoom out, let me zoom in. This volume imbalance here, anticipating that if we go up there, can hold price, then send it lower, right? Hold price right there, and that level, then send it lower. Probably reaching this level, a little bit of retracement and going even lower, taking out this sell side. We're gonna be watching that, guys. We're gonna be watching that. We're gonna be watching that. Also, this volume imbalance here, cutting through candles here at this level. That's why it's gonna be important because of this level here. So we are bearish for the whole week. Our intraday sales are gonna be held selling. This is social trades, trade with care, and amen for the word of God. And be blessed and stay blessed.